Okay, today we are going to work on problem 658 out of your textbook on page 299 and 300. We're actually going to simulate what we consider to be the sales and purchase transactions. So what we're going to do is just follow along in the book, and we're going to do the journal entries as I read along. You need to follow in your book and either watch this or work the journal entries out along with me. The problem reads, the following were selected among the transactions completed by the grill company during April of the current year. On April 3rd, the company purchased merchandise on account from Grizzly Company. List price $60,000. Trade discount was 30%. The terms are FOB destination, and the terms are also, again, 210 and net 30. So what we need to do is we need to actually go ahead and journalize this. Now, the great thing about purchase discounts, or what we call trade discounts, is that I don't really have a whole lot to do for me. Again, what I have to do is just record it based off the cost concept of what we actually paid for it. And that takes you all the way back to chapter 1. The cost concept, if I pay $40,000 for something, that's all I'm going to record it as, not what they told me they were originally going to charge me. So let's go ahead and start journalizing the April 3rd transaction. What we're going to do is we are going to debit merchandise inventory. And originally we were supposed to pay $60,000. However, we get a 30% discount for a trade discount, so this actually brings us down to $42,000. So I'm going to debit merchandise inventory for $42,000, and then I'm going to credit accounts payable Grizzly Company for $42,000. Keep in mind that all of the terms and things will be handled at a later date when we go to actually pay for things. So right now we're debiting merchandise inventory for $42,000 and accounts payable for $42,000. Zoom in a little bit more here, see if we can focus this more. On April 4th, sold merchandise for cash, $23,750. The cost of merchandise sold was $14,000. So let's go ahead and debit this, and this is just, again, a simple sales transaction. On the 4th of April, we received cash of $23,750, and we received that because we had sales of $23,750. And remember, we have two journal entries under perpetual system that we need to do, and we need to record the cost of merchandise sold. So we are going to debit cost of merchandise sold for $14,000, and we're going to credit merchandise inventory for $14,000 as well. Remember, this is the conversion of the asset to an expense, so this shows up on the appropriate income statement. Okay, so on the 5th, and this particular transaction is on page 300. On April 5th, we purchased merchandise on account from the Ferraro Company, $26,000, terms FOB shipping point, 210 net 30, with prepaid freight of $600 added to the invoice. Now, again, while we may think that this is going to be an extremely hard type of transaction to do, it's actually fairly simple. It is our normal purchase transaction. Just go ahead and adding in the freight that was prepaid on behalf of us. So what we're going to do is we are going to, on April 5th, debit merchandise inventory. The merchandise inventory itself was $26,000, and the freight expense was $600. So we're going to do a total of $26,600, and we're going to credit this to accounts payable for the Ferraro Company, and I'm abbreviating for the purposes of time here. Okay, we have now recorded the merchandise inventory of $26,000, including the $600 of prepaid freight that was paid on behalf of us. And now we owed a total of $26,600 to the Ferraro Company. On April 6th, we returned $7,000, $10,000 list price, less trade discount of 30% of merchandise purchased on April 3rd from the Grizzly Company. Now, they put some information in this particular transaction that you need to know, however, you don't need it for the actual journal entry itself. It's kind of to see and gauge whether or not you can pick out exactly what you're looking for here that you need to actually journalize. So instead of journalizing the $10,000, we took our trade discount from the April 3rd transaction right off the bat. So we're going to just return $7,000 worth of merchandise and disregard the fact that the list price was $10,000. So on April 6th, we are going to debit accounts payable to the Grizzly Company for $7,000, and we are going to credit merchandise inventory for $7,000. And that puts our inventory back to where it belongs, and it gives it back to the company, and it reduces our accounts payable by debiting. So we reduced accounts payable and we reduced the merchandise inventory for the amount that we returned back to the company that we purchased it from. On April 11th, we've sold some more merchandise. So we'll go ahead and enter our date there for April 11th. We sold merchandise on account to Logan Company. List price was $12,000. Trade discount was 25%. Terms 110, net 30. The cost of merchandise sold was $5,000. Again, with any sales transaction, we actually have to go ahead and record the sale as well as the cost of merchandise sold section. Now, originally we were going to charge $12,000. However, we offered them a 25% discount on this, so we're actually only going to get $9,000. So we're going to debit accounts receivable, because remember they put this on account. Debit accounts receivable for $9,000, and we're going to credit sales for $9,000. Okay. Then we're going to immediately follow it up with a debit to cost of merchandise sold, and a credit to merchandise inventory. And these particular amounts are $5,000. Okay. Alright. Moving right along. On April 13th, we paid the Grizzly Company on account for purchase of April 3rd, less the April 6th return and discount. So what we're going to do is we're actually going to pay the Grizzly Company that we purchased the $42,000 worth of merchandise on April 3rd, in this particular journal entry here, minus what we sent back to them, minus our discount that we are going to take. So, let me go ahead and set up the date for this, April 13th. And we are going to debit accounts payable to reduce this amount. Debit accounts payable for $35,000. We are going to credit cash because that is how we paid for it, $34,300. And for the trade discount that we take, we're actually going to reduce the merchandise inventory account, merchandise inventory, by $700. That is the discount, because we want to record our merchandise inventory for the amount we actually paid for it, not what we were told it was worth, what we actually paid for it. And this is the trick. Remember to reduce the merchandise inventory for purchase discounts. Any type of purchase discount, we're going to reduce the merchandise inventory account, not any other account. Okay, so on April 14th, we sold merchandise on Visa, which is a credit card, $90,000. The cost of merchandise sold was $55,000. So on April 14th, we received cash of $90,000. I want you to think of a credit card as simply being like a transaction with cash, and sales, $90,000. Okay, then we're going to follow it up with cost of merchandise sold for $55,000, and merchandise inventory is going to be credited for that same amount, $55,000. I actually wrote this in the wrong spot. I can't believe I just did that. 55,000. Remember what I say in class, players make mistakes as well. There you go. You've got a debit to cash, a credit to sales, a debit to cost of merchandise sold for 55,000, and a credit to merchandise inventory for 55,000. Okay, I'm actually going to change papers now and get myself a new journal page. As we know, we have to do that in the real world. Not everything goes on journal page number 1. And we're going to start fresh on this at journal page number 2 here, in case we ever need to post reference this. On April 15th, we paid the Ferrari company on account for purchase of April 5th, less the discount. So again, remember that we're actually going to decrease the merchandise inventory account by the amount of the discount that we took on the merchandise. So on April 15th, we're going to credit accounts payable for the Ferrari company for $26,600. We're going to credit cash for $26,080, and we're going to credit merchandise inventory for $520, which is the amount of the actual discount. On April 21st, we received cash on account from the sale of the April 11th to Logan Company, less their discount. So on April 21st, we received cash of $8,910. We had sales discounts of $90. And we are going to credit accounts receivable to reduce this particular account for the Logan Company of a total of $9,000. Okay. On April 24th, sold merchandise on account to Half Moon Company, $17,500. Terms 110, net 30, and the cost of merchandise sold was $10,000. So on April 24th, we are going to debit accounts receivable for the Half Moon Company for $17,500, and we're going to credit sales for $17,500. And then we're going to go ahead and do with the cost of merchandise sold. Cost of merchandise sold was $10,000, and credit merchandise inventory for $10,000. Alright, moving right along. On April 28th, we paid the service fee to Visa for $4,000. So on April 28th, we are going to debit credit card expense. Those are our fees for accepting credit cards and things like that, $4,000. And then we're going to credit the cash account for $4,000 because that's how we actually paid for it. On April 30th, we received merchandise returned by the Half Moon Company from the sale on April 24th, $2,500. The cost of returned merchandise was $1,400, so we are going to debit sales returns and allowances for $2,500. We're going to credit accounts receivable for the Half Moon Company for $2,500. We are going to debit merchandise inventory to put this merchandise back into our inventory for $1,400, and credit cost of merchandise sold for $1,400 as well. Alright, that actually concludes this particular transaction here and concludes doing all of the back and forth sales versus purchase transactions. You should definitely follow along with this particular video if you're struggling with your homework assignment, or even when you're working on some of your projects for a merchandising company. This should help you with some of your journal entries that you're doing.